Welcome to The Explainer. We love breaking down complex stuff into simple blueprints. And today, we've got a big one. Ever wonder how some traders pull off returns that just seem impossible? Well, we're going to tear apart a champion strategy piece by piece and see exactly how it's done.
Okay, get this. In 2021, a year when a lot of people were getting hammered by the market, one trader, one trader posted a verified return of 334%. Yeah, you heard that right, not a typo. 334% in just 1 year. So the obvious question is, how on earth is that possible, right? Was it just some crazy lucky bet? A total one-off fluke? Nope, not even close. It wasn't luck. It was a system. A disciplined, repeatable system that was built over decades. And today, we're going to reverse engineer the playbook of that exact trader, the one and only Mark Minervini. This guy is a two-time U.S. investing champion, and he's created this incredible approach that just works. It's consistently beaten the market. So let's get into it and break down exactly how he does it. All right, so the whole foundation of Minervini's approach, it's all built on this one powerful framework. He calls it SEPA. That stands for Specific Entry Point Analysis. And really, this is the cornerstone for everything that follows. Now, SEPA isn't just about picking good companies. That's only half the battle. It's about finding those good companies at the perfect moment. You know, right when they're about to make a huge move. The whole idea here is that the truly great stocks, they telegraph their intentions. They show you signs of what's coming right before they take off. So, what are the building blocks of this system? Well, there are four key pillars. First, the stock has to already be in an uptrend. You're not trying to catch a falling knife. Second, you confirm that with rock-solid fundamentals. Third, you're looking for some kind of catalyst. And finally, you zero in on that super precise entry point. It's really where the chart, the company's health, and the timing all come together. Okay, now for the really cool part, the visual heart of this whole strategy. This is the signature move, the chart pattern that Minervini has completely mastered. It's called the volatility contraction pattern. The best way to think about it is like a spring coiling up, just getting tighter and tighter, building up all this potential energy. The VCP is just that, but on a stock chart. You see the price swings getting smaller and smaller, and what that's telling you is that the sellers are getting exhausted, they're running out of shares to sell, and the buyers are just about to completely take over. Okay, let's look at this on a real chart so you can see what I mean. The stock starts consolidating, right? It's moving sideways, but look closer at the price action. See how those bounces between the highs and lows get tighter and tighter? It forms this kind of wedge shape. That tightening, that's the absolute core of the VCP. And what's really cool is you can actually put numbers on this. Look here, that first big pullback, it's about a 19% drop. Then the next one is shallower, and the next one even more so, until this last tiny little contraction is only 7%. It's a clear signal that the sellers are losing their punch with every attempt. And here is the final crucial clue. Check out the volume at the bottom. See how during those last really tight price swings, the volume just evaporates? It totally dries up. That's a huge tell. It means there's almost no one left to sell. All the available shares have been bought up. The stage is perfectly set for a big, explosive breakout. All right, but a pretty chart pattern isn't the whole story. Not even close. For Minervini, that coiled spring we've been talking about, it needs rocket fuel. And that fuel is real, undeniable strength in the company itself. A stock has to prove it's worthy before it even gets a look. The way he puts it is super simple, and I love this. Technical analysis, looking at the charts, the VCP, that tells you when to buy. It's all about finding the perfect timing. But fundamental analysis, that tells you what to buy. It's about making sure you're not just betting on any horse, but a thoroughbred. So a stock doesn't even get on the list unless it can pass this super strict test. We're talking serious growth, like at least 25% in both earnings and sales recently. And that's not all. Its profit margins have to be getting better, and it has to be a leader in its field, outperforming most of the other stocks out there. No exceptions. Okay, so we've got the pattern. We've got the strong fundamentals. We're ready to go, right? Well, hold on. This next part, this is the real deal. This is what separates the pros from the amateurs. It's not about the home runs you hit. It's about protecting what you've got in your account. And Minervini himself is absolutely emphatic about this. He says your first thought when you enter a trade shouldn't be, how much can I make? It should be, how much can I lose?
It's about knowing your downside and having a plan for when you're wrong, because you will be wrong. This is non-negotiable for him. And just look at this simple math here. It's brutal. Say you risk just 1% of your account on a trade. You hit a losing streak, 5 in a row, and trust me, it'll happen to everyone. You're down 5%. You can live with that. But if you're risking 5% a trade, those same 5 losses just obliterated a quarter of your entire account. That's a hole that's incredibly hard to dig out of. It's catastrophic. And this is where position sizing becomes everything. Look at this example. It's the exact same trade. The only thing that changes is the risk, from 1% to 2%. That one little tweak doubles the amount of money you have on the line. This is how you control the game. This is how you decide if a loss is just a small paper cut or a trip to the emergency room.
Okay, so let's tie this all together. How do we take all these pieces, the trend, the fundamentals, that VCP pattern, and the crucial risk management, and turn it into a step-by-step blueprint?
It really boils down to this disciplined 5-step process. First, you screen. You cast a wide net to find stocks that meet all those tough criteria we talked about. Next, you analyze. You go through those charts one by one, looking for that beautiful VCP. Then, you stock. You wait patiently for that perfect moment to pounce. Fourth, you execute. You get in, but your stop loss is already set, so your risk is defined from the get-go. And finally, you manage. You protect your profits as the trade works in your favor. So when you look at it all laid out, it's more than just a strategy, isn't it? It's a complete blueprint. And the crazy thing is, the steps themselves are pretty simple. But the discipline to follow them, day in and day out, especially the part about taking those small losses, that's what's rare. That's what separates the legends from everybody else. The blueprint is the math, but your discipline is what actually gets you there.